Hello, my good traders. Welcome to another episode of our tutorials on Leading Forex YouTube channel. Our aim here is to help ourselves to be able to find better opportunities in the Forex market. Now, in last week's video, which is our part 63 video, we talked about price action trading. Now, before I go into details about the next step today, I want to say this. When it comes to Forex trading, we have three main strategies or three main ways of analyzing the market. That is fundamental analysis, technical analysis, and then sentiment analysis. Now, the price action trading is under technical analysis. Now, under this price action trading, which is under technical analysis, we have a lot of layers. And last week, we talked about the theory aspect of it, which is the nature of the market. Okay, we talked about the first layer, which is the nature of the market. Today, we are going to talk about the structure of the market. But before we talk about the structure of the market, a lot of people are getting confused on the internet. And I want to set the record straight over here. When it comes to analysis, just as I have said, we have three main strategies or structures or three main types of analysis: technical, fundamental, or sentiment. Now, under the technical analysis, a lot of people have coined their own terms that they use as their strategies. And out of that, a lot of people are getting confused every day because they hear new terms, new names, which they feel they are not familiar. And for that matter, they think that they do not know something, which for me, I think sometimes you even know. But the name is what is getting you confused. Now, under this technical analysis, this price action trading, I have already talked about what price action means in one of my videos. And I told you that when it comes to price action, there are people who want to use indicators, tools, to help them understand how price is behaving. That is price action, the action of the price. So there are people who want to use indicators or tools to help them understand how the market is behaving. And then as a result of that, they are able to get opportunities or entries in the market. That is price action trading. The fact that the person is using tools or indicators to do that doesn't mean that the person is not doing price action trading. Now, that price action trading is actually under technical analysis. So whether you will say price action trading or whatsoever, it is all under technical analysis. Now, there are those who wouldn't want to use tools or indicators, okay? But they just want to look at the chart, the plain chart. And then out of that, they will be able to do their own analysis by drawing some support and resistance lines, some trend lines, some structures, some patterns. They look at all of this in order to decide the next opportunity in the Forex market. And that is what often people refer to as price action. The fact that there's no any tool, there's no any indicator on the chart, they feel that is price action. Now, there are those who have also coined their own terms for this same price action we're talking about. There are others who call it the smart money concept. There are those who call it the order blocks. We have those who also call it the top-down approach. We have those who also call it multiple time frame analysis, and so many other names. All these names I'm mentioning is simply put trading the Forex market or looking for the next opportunity in the market without using any tool or indicator. But they look at the naked charts. They just look at the chart. They do their own drawings on the chart by drawing their support and resistance, their trend lines, looking at some patterns. And then out of that, they are able to decide the next opportunity in the market. So when you hear someone mentioning another term in the market or mentioning a name in the market about Forex, don't let it look as if it is something that you don't know or there is something that you should know. Because these names people are mentioning, the smart money concept, is still under technical analysis. But he has given a name to that analysis that he does. Okay. Someone is doing what is called order block. The same order block is under technical analysis, which is the same as the smart money concept someone is calling. I can also call it Kofi's theory or strategy, the Kofi's strategy. So when someone meets you and say, okay, have you learned about the Kofi strategy? It shouldn't become something you'll be wondering, what is this about? Or it shouldn't make you feel like you don't know much about the Forex market. It is just a term that I have coined and given to my strategy, which is under technical analysis, maybe the Kofi strategy. So when you hear the Kofi strategy, it shouldn't kind of make you feel like you don't know anything about Forex, or there is something you should go and learn, which you have not learned. This is something I want to say, and I don't know how you are getting me or how you understanding me. There are only three main analyses in the market: fundamentals, sentiment, and then technical. And out of this technical analysis, people are getting new names every day. People are coming up with different names to interpret the way they analyze the market. So when someone gives you a name that he thinks it is a name he has coined to give you an idea of how he or she analyzes the market under technical analysis, it shouldn't be something you should be confused about. I pray you should understand me. So when you hear the smart money concept, it is technical analysis. When you hear price action, it is technical analysis. When you hear order blocks, it is technical analysis. When you hear top-down approach of the market, it is technical analysis. When you hear the naked chart analysis, it is technical analysis. Come on, the names, maybe there are even some names I don't know, which maybe you have heard of. These are people's names or terms or coined words that they use to mean how they interpret or how they analyze or how they see or how they are able to see the next opportunity in the market. What they do to see the next opportunity in the market is what they have termed as the naked chart or the smart money concept or the order blocks or the top-down approach or multiple time frame analysis. My brother, my sister, guys and girls watching me, please, all of this is technical analysis, period. Forget what else someone is saying. I'm telling you the honest truth over here. Don't let some names confuse you. You might have read some books, watched some videos or other tutorials, and you are getting confused and making it look like there are things you should know and you don't know. People are talking about this. Have you heard of this one? Have you? And you are like, what is this one? The one I know is not what you are talking about. Oh, my goodness. My goodness. My goodness. My goodness. Come on. Let's do this technical analysis. Price action. We talked about some things you need to know. And the very first thing we talked about has to do with the nature of the market. And under the nature of the market, which has to do with our past 63 video, we talked about how the market behaves. And we realized that the market moves in impulses and corrections. Impulses and corrections. Now, today, we want to move away from that nature theory or that nature part of the Forex market and talk about the structure part of the Forex market. Now, whether the market is moving in correction stage or in an impulse stage, the market has a structure in which it is doing that. It has a structure in which it is doing the impulse and corrections. And that structure could either be to the upside or to the downside or to the what we will call the correction, or to the, I'm trying to use the right term. I'm trying to use the right term oh, come on, get me this term. It's either the market is making an up move to the upside or to the downside, or the market is what? Consolidating. I get it now. Come on. Thank you, my good head. So we have these stages, and that is the structure of the market. It's either the market is consolidating or it is in a trending stage, which is to the upside or to the downside. Now, how are you able to determine this? You are able to determine this as a result of drawing certain trend lines and then drawing some support and resistance. That is how you are able to determine whether the market is trending up or trending down or consolidating. So I want us to look at these three main structures. Don't forget the part 63 video talked about the nature, impulse, and corrections. Now, whether the market is consolidating, you will find impulse and corrections, or whether it is trending up, you will find impulse and corrections. If it is also trending to the downside, you will still find this impulse and corrections. So we want to look at these structures in which the market moves in impulses and corrections and see how they behave in any of these layers or structures, whether an uptrend structure or a downtrend structure or a consolidating structure. How does this impulse and corrections work within the structures? Are you ready? Let's go to the time frames or to the chart and see what we can grab for today. Now, I am going to use TradingView platform because I have already customized this TradingView platform, and I feel there's a need to use that more because the flexibility is there. Although you can also do this on the MetaTrader 4 or MetaTrader 5. But with this TradingView, I always tell you that you can be able to drag in and out and do whatsoever you want to do anytime, whether the market is opened or closed. But on MetaTrader 4 or 5, you cannot be able to drag in and out like this unless the market is closed. So that is some of the advantages you get in terms of using TradingView. And that is why I want us to use the TradingView for this. So today we are on the structure of the market. Now, the structure of the market has to do with trend lines or being able to draw out some structures. And people always look at this from the higher time frames. So people want to go to the bigger time frame. And in the Forex market, the biggest of all in terms of the time frames is the monthly time frame. So, okay, this is on GBP USD. And I have just switched to the monthly time frame. This is monthly time frame. So this is all I have for GBP USD on monthly time frame. The beginning here is 1st May 2002. The year 2002, from the back here all the way down to the current month in which we are, which is September 2022. So you see that? So this is the monthly time frame, and this is all you can get on the chart in terms of GBP USD. So people will want to look at the structure of this market. So by drawing out the outer part of the structure, looking at the outside, the two outside ends, looking at the downside here and then the upside here. So they look at that. So determining this structure, let's look at the outer structure, the ends of this currency. So with that, let's pick our trend line and look at the beginning here down to somewhere here. We have this, which is the outside of it. And then we can also get to the top side. Let's look at what we can get to the top side. To the top side, we have this down this way. also to the top side. Are we good? So this is the structure, the general structure in which GBP USD is currently trading. Now, when you look at this big outer structure, you can get some smaller structures within this general outer structure. Within this outside structures, you can get some structures within. And if I try to zoom a bit like this, we can get some inner structures. The very first one is from here to maybe here. And please, in drawing these structures, I always advise that you will use the end of the wicks, the end part of the wicks in doing your drawings. It is very, very, very important. You use the end part of the wicks in doing your drawings. Is that okay? So we have this inner structure, just as I have drawn on the chart. If I go back to it, maybe I should change the color so that you see the two differently. Good. So you see this one is over here. We can also see some structures within. We can also see this one here. These are all structures we are drawing. We can, looking at the previous markets, we can get some structures here. Good. We can also get another structure here. We can also get another structure, a very strong trend line here. Just look at the structures. So the red line or the red trend line has to do with the outer structure. And then the other lines we are seeing, which has to do with green or so, are also structures that we can find within the outside bigger structure or the outer structure. So this is on the monthly. So once you get this, you can switch to the weekly time frame, and then you look at these structures closely. This is on the weekly time frame. Now, when you are looking at this, the fact that you have gotten the general structure, you are going to be focusing on the recent structure, the current structure, where the price is currently heading towards. That is where your focus will be. And in doing that, if you look at it, you see that the recent part here, you can be able to get a structure here. A trend line here. Is that it? Good. This trend line, which was a structure, got broken. Look at it. This structure got broken, and then we are in this current structure at the moment. Now, if you look at it, you realize that when this, let me move this line from where it is a bit. If I move this one away a bit, or let me even delete that one. If you look at it and you look at this current structure here, you will see that when the market came up with this up structure, and then it touched the monthly structure at the top, what happened? It reversed and made its way back down. So the outer structure is giving you the general space within this market is moving. So currently, the market is moving downwards. It's in a downward movement. And it is getting closer to another inner structure, which is this line here. So it is possible that we can see a touch on this, and then the trade will reverse back, or we can see a break. And once we see a break, it means it is coming out to the outer structure here. which is the last structure of the market. Because these two lines here are the last structures of this currency pair. So we have moved from the monthly time frame. Now we are on the weekly time frame. Let's move again to the daily time frame for you to see something. Now, this is the daily time frame. So zooming in a bit for you to see things well for yourself. This is what we still have in terms of the daily time frame. And on the daily time frame, we can also still be looking at some structures here like this. Are we good? Come on. And then we can also come up with this. So this is to the daily time frame side. And looking at this structure here, what are we seeing? If we should zoom out a bit for you to see things well, you will notice how price is currently trading in a certain structure to the downside. And this structure that it is trading to the downside is coming to this inner structure line we see over here. And then we are expecting that once it gets to this inner structure line we are seeing, which is somewhere here, we will get what we call maybe a reversal back to touch the top part of the structure, or a break out of this to come and touch the outer structure, which is the monthly structure, which is down here. So being able to draw these structures will give you an upper hand. It gives you an upper hand to know how the price of the market is behaving and where it might be going. Because currently this is where it is. And so we are seeing this inner structure here, and we are seeing this outer structure here. So we are expecting that when the market gets to this inner structure, looking at this pattern that is being formed, this structure that is being formed has given us a pattern which will be in our third series of this price action trading. We are talking about the nature, and currently we are on the structure. After the structure, we'll be talking about the patterns. So you will notice that this is giving you a certain pattern, which we call the falling wedge. We'll get there. This is giving you a pattern which we call the falling wedge. And whenever we have something we call a falling wedge in the Forex market, then it means that trade will possibly find the end of a structure and then reverse. So, but at the moment, this falling wedge we are seeing is coming down, which is a structure. And it is coming to touch either this inner structure here and then reverse back to touch this upper part of the falling wedge we are seeing, or it will break this inner structure and come down to the last outer structure, which we see over here. So by getting your structures, you are able to have an idea how the market is going to behave. And this is what will give you an upper hand on the market, because you are already aware of what the market is doing based on the structures. And if you look at the monthly time frame, which I drew, you realize that this market on the monthly time frame, okay, let me go back to the monthly time frame, my people. On this monthly time frame, which I drew here, will give you a clear indication that this general structure of GBP USD is to the downside, which is the downside of the structure. It is to the downside of the structure. This is not to the upside. And like I said, we have three main structures: a consolidating structure, an uptrend structure, or a downtrend structure. And at the moment, if you look at GBP USD monthly time frame, this is the general thing you can see. Maybe it looks too small, right? So I should make it look big a bit. Right down from the year 2002 up to currently where we are, which is January, we are in currently September 2022. The market is moving in a downward structure. So this is how you are able to get your structures right. So when you switch even to the 4 hour, we went to the daily, let's switch to the 4 hour. When we switch to the 4 hour time frame, we already have an idea what this market is doing. Look at it, this is 4 hour. We already have an idea what this market is doing. So we are expecting this market, this is on the 4 hour, to either give us to this touch here, make its way down to this touch here, which will give us this inner structure here, and then this one. So once the market gets here, we expect to see an upside back movement to the top of the structure here. Now, within the 4 hour too, you can see other structures within the smaller time frame. So this is how you build your case. You can look at the 4 hour time frame. Okay, let me go back a bit. Look at the 4 hour time frame. Let's look at the structure that is within the 4 hour time frame. Give me the tools. Where is it? Okay, the tools are here. Look at it. We had this over here. Okay, we had this over here. And then we also got the structure forming here. You are a Forex trader. Let me explain this quickly. Okay. You are a Forex trader, okay? You know that on the daily time frame, this is weekly, right? This is on the weekly time frame. This is the structure the market is moving with, which is, let me even change this color because I want you to see things very differently. Let me change the color to red. Change this color to red so that you see the difference clear. Now, this is on the 4 hour, okay? We are building our case right from the monthly time frame to where we are currently. So on the weekly time frame, you know that the market is trading within this top line here and then this down line here, isn't it? And then you got a rising wedge to the top, which is the whole of this to the top. By getting this rising wedge to the top, the market comes and then touches the top side of the channel. What do you expect? And then it gives you a pullback. It begins to give you a pullback, telling you confidently that giving you a rising wedge to the top of this structure means it's going to fall. And it did perfectly, came all the way down. When we get to the patterns where we look at the rising wedge, the falling wedge, and then also other patterns, the M pattern, the W pattern, with the neck pattern, the head and shoulder patterns, you will appreciate something over here. That is where you will appreciate this whole price action thing. But you cannot be able to get there if you don't do the structure. By going to the monthly time frame and then getting the total, the overall structure, the outer structure, and looking for structures within that overall structure from the weekly structure, the daily structure, the 4 hour structure will give you an idea of what to expect. Because that was exactly what we did right now. And with these structures, it has given us an edge, an idea of what is happening. Now, if I go back, let me go back. If I go back like this, as you see, now this market is coming all the way down here. It hasn't touched any of the lines here. So we are expecting that touch. And once we get that touch, okay, let me even adjust this well. Let me adjust it well to the end of the weeks. Good. So we are expecting a touch of this. So once we get that touch, then we can say that we may be expecting what? An opposite direction movement. Just like we got over here. Look at it. Look at it here. Look at the touch over here. Look at the touches. Whenever we get a touch to the weekly structure, what do you see? You see a reversal. Look at it. Look at it. Whenever we get a touch, we get a reversal. And this is on the 4-hour. Whenever we get a touch, get back to the top. You see? So this is how you can be able to draw your structures. And once you get your structures right, you will be able to get your analysis also right. You see it? So this is the whole thing. This is the whole thing. You get some structures within. If I even go to the 1 hour, the 1 hour will also give me some kind of structures. So this is how this is going to 1 hour. Look at the 1 hour time frame. Okay. On the 1 hour time frame, look at it. We are still within a certain structure. Look at it. Just look at it. So no matter how it goes back up by giving you a rising wedge, you know, this is on the 1 hour. So you get a rising wedge here. And then there is a false break out of that rising wedge. Look at this huge candle that broke out of the wedge. And by seeing that, it gives you an idea that, okay, now that this has broken out of that rising wedge, this candle, look at this long candle, breaking out of this rising wedge gives you an opportunity to go sell. So if you took a sell from this angle, the market would have given you a sell because you already know from the monthly time frame that this market is in a downward kind of structure. And by getting any rising wedge and a breakout of that rising wedge, you have an opportunity to take a sell. You have an opportunity to take a sell. And it is always like that. So when you switch to the smaller time frames, you will always have an idea. Okay, this is it over here. Look at it. So this is what I'm talking about. Now, let me use this to draw and let's go back and see if we can get more opportunities. Let me use this. Let me use this to draw. So you see, this was a rising wedge. So a breakout of that rising wedge gives you a sell opportunity because you know that that is how it's supposed to be. If I go back, let me see if I'll get another opportunity. So this was the 4-hour kind of thing that I showed you. This was on the 4-hour. Look at the 4-hour break. So we had that break out of it. And then it came to touch almost to the top of this. And then it started making its way down, making its way all the way down. Once it touches the top part of the weekly, you know that definitely you get a big sell because the market is moving to the downside because you have checked on the monthly and you know the outer structure. You have been able to determine the outer structure. So you know what is happening. You know what is happening. So anytime you get a rising wedge, you know what to expect. You get it. So this is it. You need to be able to draw more, do more of these structures, practice, take other pairs and do more of this practice, especially by going to the monthly time frame and then building your case from the bigger time frame. Once you are able to build your case from the bigger time frame, it gives you an idea of what to expect. Okay, where is it? The chart is lost, right? It's gone back totally, right? Or where are you? Oh, okay, it's here. So you see, build your case. This is the whole GBP USD monthly time frame from the year 2002. This is the whole thing. Look at it. This is the whole thing. So building your case here helps you. You see how you were able to build your case? You see it? This is the whole thing. By building your case will help you to be able to do a lot and to understand the market when it is behaving in a certain way. I'm sure things are beginning to make sense. Now, when we continue to the next part, which has to do with the patterns, I'm sure it will make sense the more. But for now, you have an exercise to do. Draw more patterns. This is a falling wedge. Once it comes to the end of the wedge, and then once in the near future it breaks out of this wedge, then you should know that once it breaks out of this wedge in the near future to the upside, then you know that officially this is no more valid, but will be going up. But for now, it is still within that falling wedge, which is on the monthly time frame. So that should give you an idea. If you pick any currency, get the outer structure, and then go to the smaller time frames, to the weekly, and draw more structures. Get all the structures. It will help you to understand the way the market is behaving. I don't want to talk much. I am sure you have understood what I'm talking about. This is the most difficult part of price action. But once you get this, once you understand this, my brother, my sister, ladies and gentlemen, guys and girls, you will take the market so easily because you know what is happening. You understand what the market is doing. And so you have no fear when you begin to see certain things happening a certain way or in a certain way. Do you get me? So please, I want you to do more of this practice and come back if you have any questions. You already know how to get in touch with me. If you even want the one-on-one mentorship, I have just reduced the price that I want to give 10 people the opportunity. So just make payment. Let me walk you through step by step, and let's see how things will go. The mentorship package is actually $100. You know that? Yes. So if you are not too okay with just watching the videos, you can get in touch with me. I'll take my time and walk you through step by step, and then we'll see the way to go. All right. I also have a free Telegram page where I share signals. Now, if you have made some losses, I want us to recover those losses before the year ends. Yes. If you've made any losses, I want us to recover those losses. So join my Telegram page. Let me share the signals, trade with them. If you go to the description of this video, you get the Telegram page link. On every Sunday, I also come your way with forecast and analysis that you can also trade. It's all on this YouTube channel. So that is also another playlist. On every Sunday, I'll bring you the market forecast or analysis or signals on the YouTube channel here, which you can trade. And on every Wednesday, I'm currently setting up equipments to see how I can go live on this YouTube channel on every Wednesday so that I can be able to give you other forecasts or signals on every Wednesday. So more things are beginning to happen on this channel. We don't want you to be out of this. We want you to be part of us. Let's build this community. So subscribe to our YouTube channel, like our videos, share them, recommend them to other people, and let's grow together. Thank you and God bless you. I'll see you in my next video. Until then, take very good care of yourself.